Alright guys, I'm back for the first video in 3 months, basically following up on what that last video was. Now, I did recently say maybe there was actually going to be a bull market, so even I got a little bit faked out, but it looks like what I was saying months ago is coming to fruition. In my last video, I would recommend watching that. I guess I'll try to briefly summarize as quickly as possible. I'm really bad at doing this, and I always end up not uploading videos because they take way too long. But I'm going to try to, in like 1 or 2 minutes, explain why the market's crashing and why I think this could be really bad. Essentially, historically, if you go and look on the Federal Reserve's website, fedstlouis.org or something like that, there's a chart about it's a chart of rates, interest rates, the federal funds interest rate over time. And what you'll notice is that every single time there's a recession, because on the chart it says shaded areas or not cause, indicate recessions, interest rates are going down. And basically, I believe that due to the way that, all right, I'll leave out too much of the meat because, again, I'm trying to explain this quickly, but basically, that when banks change the way they lend money because interest rates are going down, and they try to trap people in fixed rate spreads, because if they lend you at a certain rate and then the rates go down from there, they make money off the spread, right? Whereas when interest rates can't go any lower, when they're at zero or rates are going higher, that's when banks are incentivized to lend to you at variable rates, because as the rates go up, they can keep raising the interest rate they're lending to you at, right? Okay, if that makes sense to you, then let me just go one step from that, which is that lending, due to our fractional reserve lending system, lending causes inflation. And inflation actually causes the stock market to go up, contrary to what the media and what common opinion is. Inflation is actually one of the main reasons that the stock market goes up. Companies that perform well and outperform inflation actually get assisted to go higher by inflation. Companies that underperform inflation get crushed by it. Okay, that's what makes the stock market so leveragey. Okay, so so that's just a very simple and basic explanation of it. Well, rates are being cut, right? And in my last video, okay, so I caught you up with basically very simply with kind of what my fundamental understanding of the market is. So I said in my last video that the interest rate decision, I think the first one was here of this year, or not the first one of this year, but the first rate cut of this year was around here, and I said maybe the crash would start then. But then I said if the crash doesn't start then, the market could grind higher until a following rate cut. I said maybe the second or the third rate cut, you would see basically a massive flush start right after the second or third rate cut. Well, right after the second rate cut, which is literally right on this day, the market basically took out the highs of that day the next day and then began selling off, right? Personally, I believe this is not financial advice. I cannot legally financially advise you to make a trading or investing decision. I personally believe this is going a lot lower. What is going to happen here is what was starting here. But the news media induced a bull market by spreading a ton of fear, saying, oh, there's going to be a recession. And they were saying it all like, where's my shapes? Right around, no, okay, right around this area in price and time, they were spreading a lot of fear. And in months or early in this year, I basically was posting videos right around here saying, hey, I think the crash is going to stop very soon. 2 days later, the market bottomed, and then Trump did that major manipulation 2 days after the market bottom, and it ripped higher, made one of its strongest up days of all time. Okay, anyway, because of the institutions that control the news media were able to scare people enough then they were able to induce a bull market. Also, the Federal Reserve stopped cutting rates, right? They made a rate cut in December, oddly enough, right around here, which was pretty much the peak of the market before that crash. And then as the market went crazy, in terms of fear, Fed stopped cutting rates. Okay, so the crash stops. They induce a bull market, they scare everyone to sell, and then the market, so they can induce a bull market, it resumes. Okay, now the rate cuts get resumed again, and since the rate cuts started, you can see there's volatility increasing in the market. And now it's taking out the low of, well, it did on NASDAQ at least, hasn't on S&P yet. I haven't even looked at Dow today, but this was that big, massive flash crash on crypto and all that. And everyone was like, apparently Barron Trump did some manipulation there too, or anticipated it. But anyway, it's about to take out that low. Now, ordinarily, I would say if it sweeps that low, then there can be a bullish reaction from there. And actually, for the short term, that may be the case. If S&P takes this out, or NASDAQ just took it out, so there can be an upswing from there. That's totally on the books, right? But I don't think it will be sustained. And so long as the Federal Reserve continues to cut interest rates, which they may not in December, by the way. So if they halt them again, then the crash, what I'm saying, probably won't be too valid. The crash won't resume, or will halt, and then there will be a bull market again. But if they continue cutting interest rates as the banks try to keep up with the rate cuts, it's going to cause disinflation. And if it gets very severe, or very quickly gets severe, you will even see a mild amount of deflation. Okay, so that's why basically what you're going to see is if rate cuts continue, and as this crash unfolds, you're going to see retailers try to offer you things at discounts. My opinion, don't buy them unless you can afford it. Just because you see something at 50% off, 30% off, even like high value goods like Apple products, whatever, my opinion, I would hold off on buying them unless you need them, right? Black Friday coming up, sure, there's going to be sales, and if you have a little bit of cash on the side to spend that you're okay with losing, sure, get yourself some new goodies and toys. But personally, I'm going to be pretty risk off with my spending. And what I potentially see here is basically, I have to go on a weekly chart. Well, this is very tech related, so maybe I should go on NDX. I think NQ will have crap all over it. No? Okay. I thought I would have drawings and shit on it. Okay, so the housing crisis definitely impacted tech stocks. However, of the two crashes of this millennium, there's been a few crashes, but of the two biggest crashes of this millennium, this one was the one that severely impacted the tech and internet stocks, right? And this crash to me seems more like this type of crash. Okay, so in this type of crash, what you see is tech stocks falling well over 50%. This is a 50%. This was like a 60% drop, a little bit less. This was like an 80% drop. Now, I would not go around spreading fear to people, telling them this or that, but this crash could take out the 2022 lows, potentially, on tech stocks. Right, which would be over that'd be like what? Close to somewhat of a 70% decline. I'm just saying, don't consider that off the books. Anything can happen, but yeah, it looks like from an intraday with extended trading hours, NASDAQ is now down almost 3.5% on the day. Recently, everyone's making fun of Michael Burry for being short. That's not a good sign for bulls. Burry's going to make a shit ton of money off this crash if he's still in his puts. And on Reddit, I saw recently, the past month or two, a lot of sentiment where people were being like, well, it became like the self-aware bubble thing, where people were like, we're in a bubble, we just don't know when it's going to end yet. So basically, everyone just living in denial that a crash could be right around the corner. They're basically saying we're going to hold every down movement we see is like not to be feared, because most of the time down moves get quickly taken back out by bull markets and such and such. Well, this time, the time when everyone's basically not scared of the crash, or not, not scared of the market going down, that's probably when it's going to go down a lot more and punish them. So I don't know what this is, by the way. But yeah, I'm just saying this could be bad. It really could be a very bad crash. I sincerely believe that this could be the beginning of a very bad crash. Now, it won't all just be down, like crashes squiggle their way down, so there'll be plenty of green days within that crash, although I don't think it'll be as green as the 2022 crash, which was muted due to every time interest rate hikes occurred, right? So as they hiked interest rates, the crash got messed with by some pretty big bull swings. Well, they're not hiking rates. They're cutting rates. Okay, they're either cutting or holding them steady, but every time they cut, it's going to drop the fucking market. Pardon my French. What happened in COVID? Did you know that in late 2019 they began cutting interest rates right before the COVID crash? And then as COVID happened, they promptly cut them to zero. And as they were cutting them to zero, or basically as they were anticipating a cut to zero rates, the market sold off really hard. What happens? People reacquire debt at zero interest and start buying the market back up with it, right? People who can afford to refinance, can work it out with their bank. Anyway, yeah, it's not gonna be pretty, guys. I really think this is gonna be big. However, the important thing to know is that the market can change on a dime, and conditions can change on a dime. So, what can stop this bear market? There's two things that can stop this bear market. Okay? If they halt cutting rates, plus, like what happened with the tariff thing, if the news gets really bearish and spreads a ton of fear and a lot of uninformed retail starts getting out of their positions, then you know that the bear market, at least temporarily, is over. And I would like to connect this back to something that I was saying. I don't remember how long ago it was, maybe a year or less than a year. But basically what I was saying, I think it was a year ago, a little over a year ago actually. Back when this crash started, I said that basically, no, you know what it was? It was when they started doing this and they started liquidating the bulls and everyone started panic selling. When they did this, what I said is that this is going to cause a bull market within a larger bear market. Now, price ended up going higher than these highs, which I didn't say wouldn't happen. But what I meant is that they caused a bull market, and now people think it's really bullish, and they think that, the tariffs or whatever, it's impervious to anything now. Because, we're in a bubble, but it could pop at any time, but we just don't know when. So it's going to continue until it doesn't. And let's all just blindly buy into it, right? Anyway, that's just the common opinion now. I said that they're gonna liquidate, cause a bull market, but so long as they haven't finished getting to the whatever the target low rate is for the Federal Reserve, as long as interest rates have yet to go lower, the crash hasn't finished yet. So that's the thing to be aware of, guys. This could be serious, okay? Because rate cut recessions are the biggest and most severe. Okay? So, and that's pretty much when the recessions do happen, and they're usually pretty severe. So, I'm just saying, in terms of tech stocks, be prepared for over 50% downside. Are you ready for that? And like I said, be nimble. be aware. If they change the narrative, if everyone gets really scared, panic sells, then and they stop cutting rates for a bit again, like they did this time, like they did here. If they do that, you can anticipate another bull market, right? It doesn't have to happen all at once, but just be aware that when the rate cut happens, and recently there's been a 50 basis point rate cut, that doesn't cause it to crash, but then they do a 25 point, and that's when it triggers the crash. That's what happened last year. That's what's happening this year, right? They did a 50 basis point cut, no crash. I think, right? Maybe I'm wrong. I think the first one was a 50 basis point. Don't quote me on that. Actually, might be misremembering. But the second rate cut was a 25 basis point cut again. And for some reason, that little 25 basis point cut that no one thinks is really anything. They're like, oh, that's just smallest type of cut they could do. That's not going to move the market. For some reason, they're able to just use that little 25 basis point cut, and everything just starts selling off like crazy. So, all right, anyway, guys, I'm going to end the video here. Do your own due diligence. It's not financial advice. I'm just telling you what I'm seeing. And I guess before I go, I will just say I have a track record of calling market moves due to various reasons. There are several reasons, but I predicted this crash. And I was new to trading back then. I didn't necessarily make a lot of money off the crash because I didn't have a lot of money at the time. But I called this crash, and then I called the bull market. And especially from here, this little dip at the start of the bull market during the Silicon Valley Bank panic, there's proof on my channel. That's when I had started to piece together the inversion narrative that the news does. This is when I called for a big bull market. Right here is I called for a big bull market. Everyone was saying that this was going to be another leg down for the bear market. Sorry, 1 second. Sorry. Okay, so I was saying the opposite. I said big bull market incoming. Now, I did not foresee that little crash in the summer 23. Didn't foresee the crash. Sorry. Crash in 24. That one. But I was foreseeing this, right? I called this crash. So, okay, I'm just going to tell you guys, I'm not doing this to brag. I'm just saying that I have a decent track record. So maybe I usually can be right about these bigger term plays. All right, so the plays that I correctly called, I called this. I'll change that to green. I called this. I called this. Now, I'm not saying I picked the exact date of the bottom, although here I did call October as the bottom. I didn't do that on my channel, though, so I guess I can't prove that. But here I called this. I said bullish. I called... I started around here, I was saying this. And then around here, I was saying this. And around here... I was saying this. Now, to be fair, this last time, even I was wondering, could the bull market persist for longer? And there were a few sometimes where I was thinking, hey, maybe it's actually going to keep going up. But I'm here right now saying, I no longer believe that. Unless the news flips and the Fed stops cutting rates, I foresee, big downside. Erasing all of the gains from the past few years, liquidating everyone, and then if again, subject to change, but if the rate cuts are a slow grind down, you're going to see the market probably bottom out in mid 2028. I'd say beginning of June, end of May 2028 is when the bull market will start again. Now, that said, like I said, if things change, it's not going to last that long. But think about this. What kind of crash would hurt retail the most right now and hurt American families who have all this 401k stuff saved up? How would Wall Street go for all their money? A long, slow grind down to like nothing, and then not nothing, but like to the point where everyone thinks that the market is just totally cooked forever. They all sell, they all begin panic selling along the way, and only the smart traders will begin buying up as it goes lower, right? So yeah, basically that's the point of the video. Ended up being like 20 minutes. I'm sorry, I try to keep it short, but it's just there's just a lot to say. I could go way deeper than this, but this is just the basic premise of it, and I'm just telling you, I actually do see I'm a bear right now. I'm a bear, and until further notice. But if I see conditions change majorly, I will update you guys with that. But I'm just saying, crashes are usually short. They're usually infrequent. But every once in a while, there's a big one. And the 2022 was not a big one. COVID was not a big one. It was big, but it was fast, and it recovered quickly. Okay? The freaking... the dot-com crash, that was a big one. For tech, at least. Look at this, okay? You see... Like, seriously, look at this. I'm just showing you this because I want you to be aware that this is possible, okay? So, where's the top? Okay. Would you look at that? Okay, it was over 80%. Oops, sorry. Oh, no, it's not. Okay, so that down to here. 84% decline. 84%. Okay, this market has done that before. Okay? It is entirely capable of doing that again. If you think not, think again. I'm not saying it's a guarantee. I'm just saying that is possible. Most people do not believe an 84% decline in the NASDAQ is possible. I'm here to tell you it is. Despite being someone that has been generally a permabull on this asset, an 84% decline is entirely possible. That is massive. Okay? So I'm just saying, be aware it can happen. If it could happen from here, why couldn't it happen from here? Right? Think about it. If Wall Street and the rich people really wanted to go to for everyone's money who's been investing in this market for years and years and years, all their retirement savings. Think about it. Money's a zero-sum game. If they want to go for everyone's money, what do they have to do? They just have to drive down all these assets, short it, make money off shorting it, but really just knock everyone out of it long term and then scoop it up at a discount. But, okay, so I'll get that out of the way. Let's see, what's the high price in this? Okay. What would be an 84% decline? Let's just do a little thought exercise, fellas. Okay, that's roughly 84%. Okay, so I personally don't think it will go down that much, but I'm just saying it is possible. But an 84% decline is back down to NASDAQ, somewhere between 4,000 and 5,000. Okay, just be aware. Just be aware. It could happen, or it could. But okay, if that's entirely possible, then all of a sudden, taking out the 2022 lows is more probable than that, right? It's not likely that it goes down to 4,000 or 5,000, but going down below 10,000 is entirely possible, right? Because that's only let's look at this. A 60% decline. Now, 60% declines are rare, but crashes, well, let's just say crashes hit a 60% decline more often than they hit an 84% decline. So a 60% drop is more likely than an 84% drop. You might say a 60% drop is still unlikely, but I'm just telling you, if an 84% decline is possible, then a 60% decline is definitely possible. So I'm just telling you this so that if you were to buy some puts, long-dated puts, to protect yourself, you have some ideas of what's possible. Okay? Anyway, all right.
25-minute video. I'm stopping it now. See you guys next time.